Inflation, higher interest rates, and the Ukraine war are setting the stage for a big financial crisis. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. A storm is brewing that will be global in nature and could wreak immense damage economically and politically. The problem is that numerous countries, rich and poor alike, have amassed immense debts. Even before the pandemic, governments were spending and borrowing heavily, spurred by the easy money policies central banks were pursuing after the financial crisis of 2008-2009. This was accompanied by historically low interest rates. Now, with inflation rampant, the cost of money is rising, making it unlikely that numerous nations can serve their obligations. Even before the pandemic, the public debt of the world's 70 poorest nations had gone up by an average of 18% of GDP. But wise experts believe the levels of indebtedness here is vastly understated. Sri Lanka, beset with inflation and shortages of food and fuel, is an example of what may unfold in numerous other nations. Riots are rampant. The new prime minister, in office 2 months, is resigning after rioters burned down his official residence. But the binge borrowing of poor countries was paralleled by middle and high income countries. More than a decade ago, the European Central Bank, the ECB, undertook a massive buying of bonds of European countries in the mistaken belief that a default by a troubled country such as Greece or Italy would destroy the euro. But countries largely avoided the structural changes, tax cuts, easing stifling regulations, and tackling bloated budgets needed to get their economies on a sound path of free market growth. Japan's debt today is proportionately more than twice that of the U.S.'s. The Bank of Japan is still sticking with its virtual zero interest rate policy, which is entailing a scale of money printing that will likely send the already wobbly yen into a tailspin. This could set off a financial contagion that will hit the currencies of other Asian nations. It would also hit Europe. Can the ECB continue to buy massive amounts of bonds of Italy, the continent's third largest economy, and those of other troubled countries while simultaneously fighting inflation? Incredibly, it seems ready to try. The U.S. economy is slowing, which will be a drag on the rest of the world. Unfortunately, the IMF, which is supposed to be the doctor for financially troubled nations, imposes counterproductive prescriptions, namely a currency devaluation, which worsens inflation, and higher taxes, which cripples recovery. Almost nowhere are there leaders who grasp that stable money and low tax rates are fundamental for fast recoveries. The Biden administration here is still trying to raise taxes. Even the food crisis, made worse by Russia's war to conquer Ukraine, has yet to trigger moves to free up Ukrainian grain shipments by, say, sending ships from neutral countries to Ukrainian ports. The solutions are clear, but the leaders are floundering. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.